Hello, friends, family, and everyone else. I have a question. Oh, let me introduce myself. My name is Randy from Bell's Accounting Tax and Notary Service. You may have seen me many times talking to you, letting you know about different things. But the top thing right now, I'm just a tax professional. Um, I'm a tax professional preparer and accountant. Yes, I do. And a notary too. But let me talk to you about taxes though right now. Okay, this is the thing that is really getting to me right now, y'all. They want to know. Everybody wants to know this year why are they tax money is less than last year. That's right. They want to know why your tax money is less than last year. Well, let me explain something to you. Look to this now.
Have you ever wondered why your tax refund is less this year? It's a question that puzzles many each tax season. But before we dive into answering that, let's first understand what a tax refund really is. Contrary to popular belief, tax refund isn't a bonus or a windfall gain. It's essentially an indication that you've paid more in taxes than you actually owed to the government throughout the year. So when you receive a refund, it's merely the government returning the excess amount you've overpaid. Now that we've cleared that up, let's explore the reasons why your tax might seem smaller this year. You see, the size of your tax refund is not a constant figure. It can be influenced by a multitude of factors, some of which are within your control, and some not so much. For instance, changes in tax laws can have an impact on your refund. Likewise, adjustments in your withholdings, changes in your income, or modifications to your tax deductions can all play significant roles in determining the size of your refund. It's also worth noting that a smaller refund doesn't necessarily mean you've paid more taxes. It could simply mean that less of your income was for taxes throughout the year, resulting in a lower refund amount. On the flip side, if you see a larger refund, it doesn't always mean you've paid less in taxes. It could mean that more of your income was withheld for taxes, resulting in a refund. In essence, your refund is like a balancing act, and numerous factors can tip the scales one way or another. Understanding these factors and how they influence your refund can help you better manage your tax situation and potentially even increase your take-home pay throughout the year. So, are you ready to unravel the mystery behind your tax refund? Let's dive into the main factors that can affect your tax refund. And before we go, don't forget to subscribe, like, share, and comment on our content. Your support helps us, you with more quality information like this. Remember, at Bell's Accounting Tax and Notary Services, we're here to help solve your tax mysteries. First up, changing tax laws. They may sound like background noise that only matters to accountants and tax professionals, but they can have a significant impact on every taxpayer's bottom line, especially when it comes to your tax refund. Consider this: tax laws aren't static. They're dynamic, constantly evolving based on the socio-economic climate, political will, and a host of other factors. When these laws change, so do the rules of the game. And yes, by game, we're referring to the complex, often perplexing world of filing taxes and getting refunds. Let's paint a picture with a hypothetical example. Imagine a scenario where the standard deduction, that's the set amount of income that isn't subject to tax, increases significantly. On the surface, this might seem like a win. After all, more of your income is shielded from taxes, right? Well, yes, but there's a flip side. And when the standard deduction increases, it might make less sense for some taxpayers to itemize their deductions. Think about it. If the standard deduction is higher than what you get from itemizing, you just take the standard, right? But here's the catch. If you were previously itemizing and benefiting from certain tax breaks that are now less than the standard deduction, your taxable income could actually increase. And when your taxable income increases, you might find that your expected refund shrinks. This is just one example of how a change in tax laws can impact your refund. There are countless other provisions, credits, deductions, and tax brackets that can shift with changes in legislation, all of which can influence the size of your refund check. So, keeping abreast of changing tax laws can help you understand fluctuations in your tax refund. And remember, knowledge is power, especially when it comes to navigating the ever-changing landscape of tax laws. Next, let's consider adjustments in withholdings. Now, what does that mean? Well, simply put, when you earn a paycheck, a portion of your income is withheld for federal income taxes. The amount that is withheld is determined by the information you provide on your W-4 form when you start a new job. Let's illustrate this with a common scenario. Imagine you're a hard-working individual who decided to bump up your withholdings last year. Maybe you wanted to ensure you're not hit with a big tax bill at year end, or perhaps you're aiming to break even with Uncle Sam. Either way, you've increased the amount of money taken out of each paycheck for taxes. As the year progresses, you're diligently squirreling away more for taxes with each paycheck. However, when tax season rolls around, you might notice that your tax refund is smaller than it was the previous year. You might be scratching your head thinking, but I paid more in taxes? Why is my refund less? Here's the thing. When you increase your withholdings, you're essentially paying more of your tax obligation throughout the year. So when it comes time to file your taxes, you've already paid a hefty chunk of what you owe. This results in a smaller refund because you've been paying more upfront. Remember, a tax refund is just the government returning the excess taxes you've paid over the year. It's not a bonus or a windfall. If your refund is smaller, it could mean you're simply doing a better job at estimating your tax liability and paying it evenly throughout the year, rather than overpaying and waiting for a refund. So, changes in withholdings can significantly affect your tax refund size. It's not necessarily a bad thing if your refund is smaller. It might just mean you're managing your taxes more effectively throughout the year. But if you're unsure, or if changes in withholdings have left you with a surprisingly high tax bill, it might be time to consult with a professional. Another major factor is changes in income and tax deductions. Let's dive in to see how these changes can influence your tax refunds. Imagine this scenario. You've been working at the same job for a few years, and you've just received a well-deserved promotion. Fantastic news, right? But with this promotion comes a significant increase in your income. Now, you might be wondering, how does this affect my tax refund? Well, as your income increases, your tax liability, and that is the amount of tax you owe, also increases. This could mean a smaller tax refund. Now, let's consider another scenario. Suppose you've been claiming certain tax deductions for years, such as those for mortgage interest or student loan interest. But this year, you've finally paid off your mortgage or student loans. That's another cause for celebration, isn't it? But here's the catch. Since you're no longer making these payments, you can't claim these deductions anymore. Without these deductions, your taxable income increases, and so does your tax liability. Again, this could potentially result in a smaller tax refund. It's also worth noting that the tax deductions you can claim can change from year to year. For instance, the government may introduce new deductions or remove existing ones. These changes could affect your tax refund, depending on whether you're eligible for these deductions and whether you claim them. In conclusion, changes in your income and tax deductions can have a significant impact on your tax refund. An increase in income or a decrease in tax deductions can increase your tax liability and consequently decrease your tax refund. It's essential to keep track of these changes and consider how they might affect your tax situation. After all, understanding these factors can help you plan better for the future and potentially increase your tax refund. Therefore, fluctuations in income and tax deductions can play a big role in your tax refund. So what have we learned today about tax refunds? Well, we certainly unearthed a lot of information, haven't we? Let's take a moment to retrace our steps and recap the key points we've discussed. Firstly, we explored how changing tax laws can impact the size of your tax refund. Remember, tax laws are far from static. They are often tweaked and modified, and these changes can profoundly impact the amount you get back in your tax refund. It's essential to stay informed about these changes and understand how they might affect you. Next, we delved into the world of withholdings. Adjustments in how much tax is withheld from your paycheck throughout the year can dramatically affect your tax refund. If too little tax is withheld, you might end up with a smaller refund or even owe money come tax time. Conversely, if too much is withheld, your paycheck will be smaller, but your tax refund might be larger. Then we talked about changes in your income and tax deductions. Increases in your income can push you into a higher tax bracket, potentially reducing your tax refund. Meanwhile, tax deductions can lower your taxable income, possibly increasing your refund. It's important to keep track of these changes and understand how they influence your tax situation. Understanding these factors can help you better predict your tax refund and plan your finances accordingly. It's not always easy, but with a bit of knowledge and some careful planning, you can navigate the tax seas with confidence. And remember, if it all feels too overwhelming, you're not alone. There are experts out there, like the team at Bell's Accounting Tax and Notary Services, who are ready and willing to help. Because, after all, knowledge is power, especially when it comes to taxes.